Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
So my name is Steve Vetterl. I am a risk manager, hopefully your risk manager. I'd like to do a quick check, if I may, please. I know we have a lot of new subscribers. I typically do these calls at 10 a.m. on Tuesday and Saturday Pacific time. And hopefully in 2 months, maybe 3, I'll say a few prayers for the Vetterl family move to Florida. It will be 1 p.m. Eastern time that I do these calls. So, and I don't know, I may adjust that if I do move, because I can't see me doing these calls at 1 p.m. in the afternoon on Saturday. We're usually out doing stuff. So maybe I'll drop it back to like a 9 a.m. or something like that. Possibly even maybe move it over to Sunday. We'll have to see. I want to make sure we get these calls in though before the Forex markets opens on Sunday night. But we'll certainly be open to suggestions. Can you guys hear me okay? Can you see the screen? Do note in the chat window for chatting, I posted the links to all of the Telegram channels. Q&A window is open for any questions that you have. Let's get into it. So FinViz, the removal here, a little easier to see. finviz.com, switch over to the daily chart unless you want to look at the smaller time frame. I think it's a good way to sort of get a broad perspective of what's changed, if anything, right? So since the top in late May, early June of many currencies in relation to the US dollar, they have dropped. Pound dropped. The yen has dropped. I should say the USD in relation to the yen has dropped. The Canadian dollar, the Swiss, Aussies, gone down in price relative to USD. USD's risen in many cases. You can see as the opposite two right here, essentially. And then just the relationships between the others. Do note that if we take a look at a weekly perspective on these, this is a little different. Much higher time frame. These levels, they're really getting to be, I don't know, quality basis, if you will, especially from a long-term perspective and a lot of stuff. So I would highly anticipate once August finishes out, I could be wrong if anything earth-shattering breaks or this ridiculous Delta variant that different groups around the planet are trying to make a big deal about takes hold and any strength, we may see some changes and breaks in these chart patterns. But for now, play with what we got. We can't invent stuff. It's one of the big risks of being a trader in the marketplace is you've got to trade what the market gives you. If it gives you nothing, take no trades. So tomorrow is the 18th through the 24th. Let's just take a look here at the calendar. Keep in mind all these times that you're seeing on the screen are Pacific time. All right, so we got tomorrow here, Sunday, through essentially next, the whole next week, which essentially is the second week of July. And then we have our event for those that are attending the Florida event. I'm actually going to be flying out on Wednesday night or Tuesday night, technically the red eye, getting in Wednesday morning into Florida. I'll be there till the 3rd. So I'm not sure what I'm going to do about. I'll be able to broadcast on the 27th live, but I'm not sure what I'm going to do about the 31st. We have a huge day of events going on, and I think it would probably have to break away somewhere quiet to do the 1 p.m. at that current time zone's broadcast. Maybe I'll just pre-record that, put up there. So just make a note of that, sort of to be determined, if you will, on the 31st. Let's take a look at the news. ForexFactory.com. Always make sure you filter out folder colors that don't matter. Red, I don't care. Any other color but red. I like the non-colored folders because it shows the holidays. So we have Japanese holiday from a banking standpoint on both Wednesday and Thursday this week. Now, a lot of people in the energy space, analysts, what have you, has been making a pretty big deal about these OPEC meetings tomorrow. I can't see these playing out to affect any currencies. I really can't. So I don't see what the sort of the big deal I've caught a wind of with some of the analyst discussions, but obviously these are folks from an energy space. So the point being that if you're trading anything energy related, in terms of currencies or hell, even the futures markets, stuff like that, trading ETFs, just be aware of that event tomorrow. I don't know that I would be trading anything energy based. A lot of this stuff on Sunday is not that liquid because most markets are closed. But just a side note, monetary policy minutes probably going to not be something you want to be trading anything AUD or Aussie related. Holidays I mentioned. We have the big one here. So don't forget about the 22nd and whatever time zone you're in, the CCB press conference. It is could be a mover. And then essentially German stuff on Friday. So just being aware of all these different events. Let's take a look at the markets. S&P 3 days down and then a big one. Be a complete change in trend. We'll have to stay tuned for those trading equities. Look at the dollar. Not really doing much here. If we just focus on daily chart first, you could sort of see the grand scheme of things. We've been in this lower downtrend now for what arguably is where we broke down into it half a year. I've been trading in essentially a little bit more than a $3 range for a half a year in the dollar. No surprise, things are cooling out. Volumes on the summer are lighter. I'm not seeing anything meaningful in any of these patterns. If we jump to the weekly in the dollar, you could see that we are up against what has been for some time a very solid resistance area here, just under 93. Which could run, quite frankly, as high as 93 and a third. Typically, you want to look for zones for this kind of stuff. So that may cap us in terms of upside movement. If we look at the opposite side of that, Euro US dollar, again, bigger term trend. Let's start with the daily chart actually first. So been trending up, but we've been flatlining for half a year. Came down underneath this level here. Arguably a little head and shoulders formation up here. Neckline broke. We just kept us in this lower trend down. As we potentially break lower, unless some inflation stuff really starts to go crazy. Note that last week, Federal Reserve Chairman Jay Powell, who is a very wealthy man by his own right, continued to push off any of that inflationary discussion, which was starting to be echoed by some non-voting members of the big central bank here in the U.S. A couple of weeks previous. We've seen a lot of the indicators. If you haven't seen in the last 2 or 3 months, we've seen a lot of inflationary tick ups in everything from core CPI. We've certainly seen it in the price of real estate, energy, housing, I should say, from all aspects, primarily just residential. Prices of everything from used cars, which are actually down a bunch recently. For those tracking, Mannheim's the big auction house across the country. They have an absolute monopoly on the secondary car auctions from a dealership standpoint. So they have a tremendous database that they've just make it public as an index. It's what's called the secondary used car market index. Being a big motorhead myself, I have a tendency to pay a lot of attention to stuff like that. But that index is off almost 20% just in the last month. So those of you looking to buy used cars in the U.S., Let your hearts not be troubled. Price may be coming down for you in that respect. So just looking at the euro again, real tight range. Each of these represents a single day. Pound, same chart pattern, kind of from a daily perspective, still stuck in a real tight range. A lot of overhead above this pattern, essentially from the standpoint of moving averages, which looks like one just crossed about 4 or 5 days ago. I'm not sure if I noticed. Not sure if I noticed that. I'm not sure if I'm reading too much into that, honestly. Know that this is beginning to coil. So we've seen a lot of that. Coiling is nothing more than a pattern that starts to tremendously tighten up. The only thing you can sort of take from any kind of tight coiling pattern that plays out is that there could be a snap out of that, right? It's not a guarantee. A lot of times the first break is a head fake, and then it winds up going the other direction too. So it just messes with one's head unless they truly understand how these patterns play out over the long term. So you're always looking for the first break out of a tight coiling, and this could be a pattern that plays out in anything. Whether you're trading equities, commodities, forex, futures markets, other types of stuff. Always something to be aware of is we've got coiling patterns. We've got a coiling pattern in showing in a lot of different currency pairs, both the crosses and the majors. So just be aware that it could play out over the rest of the summer, right? Just know that September and October are typically, for a lot of investment managers globally, whether your mutual funds or some other type of fund that is run, it is in many cases your fiscal year end at the end of October. So very few asset managers globally have a calendar year end. It's typically a fiscal year end, which is October 31st. What does that mean? It means that typically there's good losses in stocks generally in September, but there's a lot more volatility, especially VIX related stuff, which I don't talk about much, but I think that at some point I need to bring in the VIX discussion. So this is a VIX, just a volatility index. And obviously the argument is that, well, hey, Steve, why do I give a rat's ass about this? Because this is all S&P related. Well, the movements in equities globally, especially any kind of crazy movements, always need to be, at least at the very minimal, understood before you're trading anything else, right? So there's always periods of time where the volatility will pick up. And if you look to see on a longer term chart, obviously when the pandemic broke, you had some major readings that were nuts, right? We haven't seen readings like this since the financial crisis. So if you look back at some of the highest readings we've seen ever, it was the top of the financial crisis. I mean, this is basically right here, anything above 80, this is like Armageddon. And that's kind of what we saw through many periods of time as this very fraudulent period of time broke, with lots of mortgage-backed pools being full of crap paper, but yet still having a AAA rating on it from a rating agency standpoint. So if anybody ever tries to explain to you what happened during the financial crisis, there's always lots of people, depending upon their narrative, looking to blame different things on this. But at the very least, it was a lack of risk management. They built huge portfolios of credit default swap, which is a non-backed insurance policy, right? There's no reserve, and these defaults all came due, and they had to step up to the plate to pay them, which unfortunately Goldman made out great on, and AIG got clobbered, right? And then the rest of the story plays out depending on the financial journals that you listen to. But this is a concern because right now, we have a lot of that same high leverage stuff taking place in the exotics, which essentially is just these credit default swaps. It's nothing more than a sophisticated derivative that is built by algorithms to protect something and pay the seller or buyer of whatever the derivative is on a tremendous amount of money if they get the bets right. The problem is if you get too over levered in any financial system with these types of derivatives, the marketplace just can't withstand the shock like we saw in 2008. So unrelated to Forex, but just an education generally in volatility, which essentially I always want to try to convey being the risk manager. So let's take a look at some more currencies. USD CAD, back to the daily chart. We'll set the scale. So I'm going to hide the volume profile so we can just focus on, and I tell you, this custom Bollinger Bands that I had help putting together from very, very helpful sources, really just been absolutely spot on, I gotta tell you. Even on the weekly charts, this Bollinger's just been spot. I mean, obviously it took a pandemic to actually break these lines, which is really rare. In any case, daily chart as I digress, back to real solid line down here, by the way, at this whole 1 spot 20-ish area, sort of the edge of the cliff, if you will. If I look at a weekly chart on this, big supports right here from a weekly perspective. But the ultimate end of the so if for some reason the dollar continues its path down to ultimately what I envision to be somewhere in the 85 area, which is, you know, obviously a full 8 points from where we are now, this is going to crash through this area. If we break through this, there's no way, quite frankly, I'd be interested in taking any longs on the first couple of breaks, first few days. So try and stay away from that if you can recall this level when we break. Let's see, dollar yen daily. It's like the 111 spot 71 area is the fairly not as strong resistance. So dollar in relation to Swiss, same thing. Still a tighter broad range holding. Gone into a lot of this detail in the past, guys. I'm just going to sort of glaze over it today. But if you want to see a deeper dive into that, I'd watch some of my last couple of Saturday presentations. Now, it's been a first time since, all right. And arguably beginning of December that we've seen this area in terms of weakness. This is the weekly charts. We're going to go back to the daily. The more of a defining downtrend that we're seeing. Interesting that all these that crossed each other right here, these moving averages, the brown, green, and the yellow lines that crossed each other, was sort of the you know, a confirmation, if you will, of a continued downtrend. Had a little bit of a pullback, and all these are always the best kind of shorts to take. You have a defined break of some area, comes back to test higher, doesn't necessarily finish as high, but have made some sort of spinning pattern or some sort of island reversal doji or something that prints, and then it comes back down inside of that is more of a defined. It's a great place to do shorting from a swing or a little more of a longer term perspective in any chart pattern. Let's see, Canadian Swiss. Again, haven't seen these levels since this particular case. It's the 21st of April. We reversed pretty big off this level. So keep that in mind too. Could see a reversal off that. Or maybe we finally break the pattern and these red lines don't offer that support. We head back down to, which I would think the support level would be somewhere in this spot 70, 50-ish area. JPY. So the Canadian, again, some weakness. Euro GBP. Really, really solid support down here. It's bouncing off it every time. We spent a lot of time in this whole area. You know, in the broad scheme of things, you can see here about a year right now. Been real tight pattern. Is it coiling? Question mark. Could we see maybe a more protracted move out? Typically, this currency doesn't offer the kind of volatility. I mean, even look here during the pandemic. Yeah, this was a crazy move in normal relations, but we haven't seen any volatility anywhere near this. So things are sort of cooling out and it's a tighter range. Let's do, since I got a request for GBP CAD, let's do the Neo. So nice reversal. The difficulty I have with this currency pair, and I'm going to really spend a lot of time on it, is you really got to, in my opinion, you've got to spend a good amount of time looking at, you know, DXY, the dollar index, then looking at USD CAD, right? And then really taking a look at a relationship between the pound and the dollar. Then you can move to this. So it's almost like you got to look at, you know, an index and two other currency majors in order to feel or get an idea of where we can move with this. But just from a technical analysis standpoint, you know, we've crossed above a lot of moving averages. We came up against, every time we've touched, let's see, with some of these candle wick tops, like up here, especially up here, we've come close to a stretched move Bollinger Band wise, right? Remember, this is the Bollingers I showed the other day with these settings as inputs. Pretty good stuff, by the way. Notice the standard deviation at 275, not 2. So I've had a couple experts look over this and give me some augmented adjustments and settings. But it's supposed to, you see how I rolled the Bollinger Band up. Now we reversed once first time we've peaked outside of it in a while, actually, right? Down here we did a little bit, peaked outside of the bands a bit. So it just tells you we were getting really stretched. Every time it's come back to that, it's been a pretty good indication that we'll pull back. So these Bollingers, I think, has been an excellent addition to the technical analysis arsenal that I've been showing. AUD CAD, this is another one I want to make sure you're clear on. We got a real solid coiling going on here. GBP NZ, they haven't shown this one in a while. See how solid these bands are? It's just bananas how good this stuff is. So if you're trading the fringe, it's real solid that you're going to get some reversals off these bands. Now let's take a look at the 10-year. I prefer the iShares ETF because it shows me the market profile. Remember, you really can look at the longer term in terms of where the volumes are in all of the executions, but it's the most shorter term or wherever the pattern is most recent. Arguably right there. Puts us almost at the same center line for an even larger data set, this whole 114 area as far as the 10-year. Isn't that interesting? So it offers some pretty solid support on this. Gold. This red line is the point of control for the question I just got. I would think that the question I just got on yields, either the 10-year or developed markets bonds in general, US being the first with the treasuries, is that typically when you have a flight to safety it's a very simple inverse correlation that yields will drop as bond prices go up. So you probably think, well, why do bond prices go up? So if if equities are selling off, and I'm not going to get into all this, I could talk for another hour on this subject, but historically, when and generally is the thesis that if large volatility is measured by the VIX, right? Maybe some crazier readings are starting to build up in the VIX. Over levered funds globally will delever in equities. And in many cases, they'll park that money in the treasury markets. Most times it's the 3-month T-bill, but they could park it in, a longer term bond, thus pushing the prices of the bonds up and then the inverse yield down. So if you ever go onto my Market Watch channel, you can always jump inside and take a look at the photos of like a little macroeconomic course I posted. So I call it the Forex cheat sheet, but it shows you the correlations between yields and the money supply, either an M1 through an M3 money supply, all the way on down to the balance of payments from any country. It's actually a real good basic lesson in macroeca, which serves quite well when you're looking at quotes from different, so like the bond market, how's it affecting, or how's precious metals being affected by inflation, right? So the spot market in gold, this is when Bullard opened his mouth and said, hey, we have a little bit more than just transitory inflation. We got inflation, right? So when that happened, gold just took a wicked hit. Settled out to, no surprise, our point of control line from our market and volume profiling on the left-hand side here has found a lot of support in this area. A lot of buyers that have executed trades right in this area. That's what the center line is showing us an aggregate of. So I would expect that as I looked for a break. We got a pretty big break. But but then again, there was a big old liquidation in equities. I know there's a lot of over-levered funds in gold, especially right now. So any hits that come in the form of equities, it's going down, sort of that baby with the bathwater thing, right? That's why we had to sell off. But this was a good pattern to break from. Somebody was long call options or some sort of over-levered currency-based trade. This is actually a pretty good day. It was easy to tell because it just looked like it was ready to break. Came right back down. Now we have this yellow line showing up right at 1,800 an ounce, right in that area. Pretty solid support because we broke from that, so that should hold us short term. We'll see. All right, what else do I want to address? Let's take a look at the coinage. So I posted this chart. Posted this chart. Thank you, Vlad. Appreciate the. You're always a good cheerleader for me, brother. Thank you. I posted this chart on Telegram, a little bit of snapshot, kind of what you're seeing here. Get a pretty strong support where we're at right now. Not a lot of interest in this. I noticed somewhat left a lot of the hot conversations that used to ensue right around the peak in this towards the beginning of April and into the middle of the month when it peaked. There was a lot of bag holders up here, guys. Somebody the other day on Twitter, I think it was Charlie Bailello. He's like this massive data aggregator guy. He's a real smart dude. Won the Charles H. Dow Award last year. I think he said this. They did some sort of like a Twitter data collection. There's just tons of people holding for these prices, right? These are what you call bag holders, right? And they're praying because many of them are off 50%, right? They're praying this doesn't break. Depending on how levered they may or may not be, this doesn't look good for a break. Now, what I will say, and this is a CYA statement. If you don't know what that stands for, it stands for cover your ass. This is CYA on this. If we break again below this, I would have to see volume though. This is not my idea of volume down here, but I would have to see higher volumes like we've seen it here. If we break this level and we get another reaction off this, it probably could be a tradable long back to 40K. Don't know that I'd hold a lot more than that. It is strictly a short-term trade, and it would have to be followed by volume. So just because price gets rejected, and we're back up, we're lobbing around down here towards the bottom quadrant of this range, right? That doesn't show institutional, jumping back on. I would be very hesitant I would want to see a very quick and swift move to just go up and completely barbecue everybody that's loading the boat short, right? Then the real move can begin. So it may move up, and who knows? The problem with anything that trades with super expensive shares like, Berkshire Hathaway or Amazon or Google, anything that's got just a wicked high share price, you have much lower volume because everybody can't trade in this. But unlike that share, you can break up the coinage. So I think the interesting thing is, though, I really would have wanted to see some sort of accumulation, like a just slightly increasing volume, maybe up to, I don't know, somewhere where this dotted line is as we're coming down here. This may not be the easiest to see. Let's try this. It's all about looking for clues and hints as to what the other time frame players are doing, right? So OTF players, which is other time frame, is nothing more than a fancy name for a collective group of institutional guys, right? They could be big mutual funds. It could be the grayscale guys, which are running ETFs on this stuff. It could be, any kind of sovereign wealth fund or a group of crypto heads or whatever that collectively run some fund. It could be, who's that goofball that runs MicroStrategy, whatever the hell his name is. He's always got these stupid laser eye pictures of himself, that try to get collectively and all that. I would really want to just see an increase in volume. It's really that simple. A quick flash down. Somebody that probably has much better technical analysis on this than I am had this 28.5 area, which essentially is the low of this move, as your final line in the sand. You see how there was a nice flash down and just a real quick rejection of that, at least led to a little bit of a tradable bounce, right? As what, maybe a little more than 10% off that trade. Not much. I'd like to see this thing ultimately go down and spend some time. Said this. If one wants to really trade a viable pattern from a long-term perspective, we would flash down to this whole 20K area and spend some time basing. Who knows? I could be dead wrong. Couldn't even see any of that. And we can begin to build a tradable base. This is not a tradable base. Okay. A cup with handle with growing accumulation. Then when the handle breaks, you have that buy point. And the reason these patterns are the way they are and why they're so successful historically is that we've shaken out all of the sellers and now it's time to go up, right? Or we've shaken out all the buyers and now it's time to go down. That's the key to these patterns playing themselves out and being effective. All right, so let's see, Ethereum daily. Those chart patterns look the same, right? No surprise. At least the recent action. What else? For what it's worth, whenever something has spent a real long time okay, building a base, right? Like this big Amazon base, which is a year. And we're coming up to point, right? Notice when, forget about the rest of this, just focus on this part. Notice when we came to buy point, which was somewhere in this area right here, we broke, and a lot of shorts had to cover me, longer term shorts. Notice the next couple of days, there is no increasing accumulation or growing volume, right? That's a sign that this breakout has failed. And I would fully expect, unless the pumpers or the quantitative easing crowd comes back in on Monday and starts to support this, I would expect this to be a failed breakout. So in equity land, normally, if the breakout completely fails, we get back down underneath the break point. It usually, from a market and volume profile perspective, wants to auction all the way down to the bottom of the range. See if there's any buyers. This, from a Kmart blue light special standpoint, if you don't know what that is, it's a joke from us older folk in the US. Basically means something's on sale. He used to spin these stupid blue lights around at Kmart and people go running to wherever their special is. But the lower part of this range typically will be tested. Right now, I'm not saying go out and buy Amazon right now. I think the stock is ridiculously overpriced, and it is priced to absolute perfection. But them and Baba are the only players on this globe in this area right now outside of Walmart. So this the competition is not all that strong. It's another reason Tesla's so ridiculously overpriced. But just understand, kind of just from forget about the instrument that we're trading of the assets, just focus on the chart pattern. There's a couple others I saw during the week I thought were cool. No, it wasn't this pattern. For the question I just got, GDX is the miners, GLD is the metal itself, Spiders Gold Trust, GDX of VanEck Vectors, which is just a miners index. Here's oil. I don't see much going on here. Who knows? Maybe I'm wrong. Maybe these OPEC meetings show something different. Oil on a weekly for the question I just got. All right, cool. All right, guys. On the Friday that I'm speaking in Orlando, my topic is going to be the holy grail of trading. So there's two components to what I think is the holy grail in trading. Many of some of the top educators and top traders around the country would agree. I think where we disagree is and where the importance lies. But I'm going to be talking a little bit on risk management, how to break it down from a very simple perspective and use some statistics to be able to demonstrate or to show that. I think this will be understandable. But at the same time, the cool thing about it is when you're manually trading, as long as you got tight risk, 3-to-1, 4-to-1, even if it's 2-to-1, and you have, over a 45 or 50% win rate, you're still going to want to take those trades all day long, as much as you possibly can. If you can increase your analysis a little bit better, maybe get a win rate manually up to a 55 to 65% with a 3-to-1, you'll make money all day long. You'll be making money hand over fist if you get enough opportunities to trade. So, and then the other aspect is the mental, or what I like to call the inner monkey of emotions, and putting yourself in a position, just like a professional athlete does, especially the ones at the top of their game, and they'd be able to execute just like the mechanical, right? Those are the two keys to the Holy Grail. So I've given you a little bit of an insight, and I'm going to expound upon that over the 30 minutes that I'm going to be up on stage. So look forward to it. Anyway, everybody have a great week. Be well, stay safe. Thank you for the support as always. Appreciate the nice comments. May the trades be with you.